Well, howdy there, folks. Welcome back to the channel. So it's been a rather interesting week for the markets overall. And one of the top stocks has been pumped a lot on YouTube, went bankrupt this week, this Voyager Digital stock. And if you couldn't see that coming, then you probably don't know how to read a chart because look at this. Since last year, when it peaked at $26, it's been like a roller coaster straight down. And with the crypto markets crashing, that has directly led to this stock going bankrupt, of course. And I haven't done a crypto video in a while, but I'll get back into that eventually. But who knows the future of crypto at this point? But what I really want to talk about is how this market just makes no sense. Not so much this Voyager Digital crashing, because I mean, after a while, I mean that the fact that that happened made perfect sense if you look at it. And another one that's on the way out is one of my favorites, the VGFC, or Very Garbage Food Company. So this one should be delisted from the NASDAQ any day. I made a video back in March talking about how the NASDAQ has the requirement where if a stock is not trading at $1 per share, that it can only go so long without trading at $1 per share before it gets delisted. So this should happen any day. I actually did a Google search, help the parent company out, right? Will VGFC be delisted? And someone said they must have received their notice from the NASDAQ. They will not be in compliance with the $1 minimum price rule by July 13th. That's only in a few days. So we'll see what happens there. But I think that one's on the way out too. So not a good year for popular YouTube stocks that have been pumped quite a bit. But the overall point of this video is being able to help people to better understand market indicators, because what's happening, we're in a very, very unpredictable market this year. And it's to the point that I don't even have a very good idea what the market's going to do. Like the last 3 trading days have made absolutely no sense to me. And I've been looking at this for a while. I've been studying this for a while. And the most immediate thing I can say as far as what's going to drive the markets tomorrow is the unemployment data. It's expected that the unemployment rate is going to tick up because we're already seeing layoffs happening in the economy. We're seeing a big downturn. Obviously, I think everybody knows now we're going into a recession. How significant it's going to be remains to be seen. But if that unemployment rate ticks up higher than where it is, it should, in theory, drop the markets. But what I've realized is that me personally as a trader, and the things I tell all of you all, while they help me, hopefully I can share them with my audience and help all of you all to better yourselves as traders and investors. So what I found, I needed to find a single source to aggregate all of the news that's going to drive the market. And the best source that I found, rather than just scrambling and saying, well, what the heck's driving the market today? Because a lot of times, if you follow news, especially like business news, like on the major TV networks, a lot of what these people say just doesn't always make sense. All of a sudden you'll see the market open down, or you'll see the futures down, then you'll see the market reverse. And then they'll tell you, well, today the market is reversing and now it's going up because while the market has priced in interest rates going higher, it's priced it in more fully now. And to the average investor, that just doesn't make perfect sense, because it's like, okay, well, a month ago, if the interest rate went up, 3/4 of a point or 75 basis points, and the market free fell, then if the interest rate's going to continue going up, which is an abnormal high level of rate increase for the past few years, then why would the market go up? It just, I mean, if somebody disagrees, hammer me in the comment section by any means. But to me, it just doesn't make sense. Like today's run up, and I'm going to show you the single source that I've found, the single point of market information. It's actually a Forex trading site, but it's really good in terms of aggregating basically everything that's going to impact the market that day. So like I'm looking at today, my prediction on the market today was completely off. I thought the market was going to actually drop. For some reason, it soared. So this site, forexfactory.com, and they're not sponsoring me, but I happen to like the site, so I'm pulling it up. Because so far it has been valuable as far as showing an aggregation of everything, not just in the US, but around the world, that And this is focused on like currency trading, but this is very useful to our market as well. So you can see like different currencies up here, different countries, like the euro versus the dollar, the British pound versus the dollar, the Japanese yen versus the dollar, and different things that impact like Japanese yen, the euro, the British pound. But we're mainly focused on looking at news for the US market. So the big piece of news that I thought would be a negative impact on the market today was the job cuts year over year. And it was 58, almost 59% higher than the prior number. And I thought, with that happening, I mean, that's a significant indicator of a recession. So how has the market already fully priced that in? It just doesn't quite make sense because we haven't even gotten into quarter two earnings yet. When quarter two earnings start to come out, they're going to show everything that's been happening over the last 3 months with layoffs, freezing of open recs, inventories, the impact that inflation is having on companies' bottom lines. I mean, I expect we're going to see a lot of negative things. So while we've had a 4-day run up in the market, I don't expect that to last. But who knows? In this market, I could be totally wrong, as I have been the last 2 days. So, and then this morning, we had a number unemployment claims, which were 5,000 higher than expected. That should be kind of a negative driver as well. Crude oil inventories, this was showing red, but you can see this doesn't have as significant of an impact because it's in yellow instead of orange. Now, when you see red, red is major impact. So what I want to look at for tomorrow is what I mentioned earlier in the video, the main drivers tomorrow in the dark red here, unemployment rate for the US and for Canada, actually, both come out at the same time. I actually didn't realize that. Average hourly earnings month over month, non-farm employment change, unemployment rate, which it's expected to stay the same, which I can't imagine. I can't imagine the unemployment rate staying at 3.6% at this point. I see it going way higher. Maybe not way higher, but I see it definitely ticking up. I would be shocked. I mean, if it somehow stays the same, I would think the numbers may not exactly be above water, but who knows? But what I want to do, I want to go back and kind of back test the last time the unemployment data came out. It's always the first Friday of the month. So we're going to go all the way back. We'll back up a little bit here. This was another thing. This JOLTS job openings that came out July 6th was higher than the forecast. So that indicator made sense because this means that the job openings still exceeded the forecast. And not only that, but this is still way high. Like for an economy going into a recession, this would eventually have to dry up. But for 11.25 million jobs to be open with a shortage of people to fill them, there's no unemployment situation or crisis in this country right now. And then the Federal Open Market Committee, the Fed meeting minutes, that was another driver. I thought that was actually going to reverse the market this day, but it didn't quite, because as these talking heads on TV say, the market is pricing it in now. So go figure. But I'm going to go back to, and then CPI data. I just saw this here for another country, but CPI data comes out next week. And that could be another bearish driver for the market. This was on July 4th. So obviously we weren't open on July 4th. Going back to a couple days ago, PCE, some other minor indicators. The final GDP numbers, actually, that was a negative indicator on this day, June 29th. But I'm going to go all the way back to the beginning of June just to show, because I want to look at what the market did that day in reaction to the unemployment news, because that's usually a significant impact on the market in whatever direction it goes. So we're going to go back to the first Friday in the month of June, which was June 3rd. So June 3rd, the employment change was higher than it was forecast to be. The unemployment rate ticked up 1%. So let's go look at the chart. We'll look at the Dow, which the Dow shouldn't really be the focal point, but we'll just look at that because it's talked about so much. And then we'll look at the NASDAQ and the S&P 500. So let's just go back to like a 6-month view. June 3rd. Didn't impact it too much. And this is going to be outside of the month view. So that news didn't impact it too much. If we look from the second to the third, it was 33,223. And then well, actually, it did drop like 400 and something points that day. But in the context of this whole chart, it doesn't look that huge. But if you look from June 8th all the way to June 17th, in those 9 days, it dropped significantly. So let's go back to our site here and see what drove that. So starting on June 8th, no major indicators, some bond news. Unemployment claims were way higher than forecast. And then the big one, I think, was the CPI data on June 10th, 11th, 12th were weekends. The PPI data, June 14th. Retail sales. Oh, and then the Fed funds rate. This was where we got the increase. So the Fed funds rate and the CPI data helped drive the market down during that period. That's what seemed to drive the Dow down. But the focal point of this video, it's important to, like I say, have a single source of like an aggregation of news that's going to impact the market over that time period. And I think this site so far does the job the best. Maybe not perfect, but it does it the best overall of what I've seen. Now let's look at the S&P, because in my opinion, I think the S&P is more representative of the overall market than the Dow. So let's look at 6-month view, and you'll see from June 7th to June 16th, it was down almost 600 points. But if you look at the impact of the employment number, it dropped the S&P about 68 points. So that was a significant drop. So really, unemployment, CPI numbers, and the Fed interest rate increases, those are the three biggest things that are going to drive the markets, because CPI, that's inflation data. To a degree, PPI can drive it, but unemployment claims and the interest rate announcements by the Fed, those are the three biggest factors that drive the market. So while it's really difficult to make sense of this market, those help you. Having an aggregation of news sources like that can at least help give you a better idea, even though you still may be completely wrong like I was. But at least in the case of Voyager and VGFC, I think it was obvious that those stocks were going to collapse. So with all of that being said, hope that was useful. If you like that, please remember to like, comment, and subscribe. And thanks for watching. Take care.